Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to silverradio.fm. Available online at HouseStreet.com, TalkDigitalNetwork.com. Welcome to silverradio.fm, podcasting in 0.99995. I'm Jim Goddard. My guest is Ted Butler, founder of Butler Research, LLC, online at butlerresearch.com. He's speaking to us from Cape Elizabeth, Maine, on the east coast of the United States. Where else would it be? Ted, welcome to the premiere episode of silverradio.fm.
Well, thanks a lot, Jim. I appreciate it.
First, what's new at Butler Research, and what does Butler Research do?
Basically, well, we just celebrated our 10th anniversary, and as it turns out, we're kind of doing exactly what I've done, all along, which is namely a specific focus on gold and silver with the COMEX as the main determinant of price, including the Commitment of Traders report. And over the years, I've gravitated towards much more of a focus on J.P. Morgan, which I'm convinced is the kingpin and dominator of all things gold and silver.
We're hearing there could be a silver shortage. Is there?
Yeah, by my definition of shortage, if you accept that, which is basically a temporary lack of immediate availability and an increase in price over what was normal. We're seeing that both on a wholesale and a retail basis, certainly on a retail basis, but there's signs of it on a wholesale basis. How long it's going to last is, remains to be seen, but I would say current conditions meet the qualifications for the definition of a shortage.
Is it hard for a person to find silver if they wanted to buy some? Depending upon what price you're willing to pay. I mean, obviously, if price is no object, you can generally get a hold of anything. But premiums, certainly on retail items, are much higher than they've been in a decade or so. And so that's one aspect of it. And you have delays. You can't get immediate delivery all the time. But interesting, on a wholesale basis, we're seeing signs of tightness there too, where the availability isn't quite there. The premiums aren't quite as steep as they are on retail stuff, but you can get it if you pay up. If you're price conscious, you're going to have to wait a while. How close should the purchase price of silver be compared to the spot price?
Again, it depends upon the item. If you're talking about the industry standard unit of trade in silver, which is 1,000-ounce bars with serial numbers and hallmarks and specific weights, it should be the spot price. That's what it should be. Either that or the COMEX, nearby COMEX delivery price, because you can take futures price, because you can take delivery of that. If you're talking about retail items like Silver Eagles, for instance, well, they leave the mint with basically a $2 or more premium, and the markups can come from there. So that's not unusual, but they are about, from what I can see, $3 or $4 above what the prices were, say, a month ago.
Silver mines are closing down due to the coronavirus scare. Is this bullish for the price of silver?
Yes, certainly on the surface. It's a fluid situation. I mean,
I don't know how long it's going to be lasting, but while mines shut down, of course, that puts a crimp on supply and have to be considered bullish.
Are silver refiners also closing due to the coronavirus?
Kind of the same thing. I mean, you see some sporadic reports anywhere, I guess, where people gather. There's a chance of a shutdown because of the virus. It looks kind of temporary. To be fair, however, production, whether it's mine production or refinery production, was probably offset. A reduction there is probably offset by a reduction in industrial consumption. And generally we look at production and refining and consumption on an annual basis, so the things don't change that much. The wild card, in fact, they don't really have much to do with the price. It hasn't for a very long time. Production or consumption, which sounds kind of crazy, I admit, but price is kind of determined, one, on the COMEX and in paper trading, but investment demand is always the wild card in silver and gold, in that that's the one type of demand that you can basically flip on and off like a light switch. And with the coronavirus and fears of financial contagion and all the things that are going on nowadays, the light switch for investment demand has definitely been turned on. And the miracle is that the prices haven't gone any higher than they are. You know, we're still down maybe a $2 or $3 from where we closed last year, December 31st. We're up about $3 from the lows of 2 or 3 weeks ago, but with all that's going on, the real puzzle or focus of attention is why the price hasn't gone up with all the stuff that's going on. There's a good answer for it, a reason for it, but that's really the focus of attention.
Why hasn't the price gone up?
Because the simple answer is because the price is manipulated on the COMEX, principally by the crooks at J.P. Morgan. And if you had to, that there's probably a long list of auxiliary or contributing reasons that go on after that. But if you want to, get to the heart of it and the core of it, prices are where they are in silver and in gold because of J.P. Morgan. They determine everything. They're the super crooks of the metal market, and it's amazing. I've been saying this now for better part of a decade, ever since they took over Bear Stearns, and you would think by now a lot of people are picking up on it, and they mention when someone asks who's the big controller of silver or what's the one name that comes to mind, it's always J.P. Morgan, and the crazy thing about it is that they shrug it off, which is very, very unusual for a financial institution, including, especially the largest bank in the United States, and it's for them to shrug off direct and open public accusations that they're criminally involved in manipulating both the price of silver and gold is just absolutely amazing. I used to sit, when I started doing this 10 years ago, when I first started figuring out that it was J.P. Morgan that's at the heart of the gold and silver manipulation. In the beginning, when I said it kind of tentatively, but strongly, and I would in the beginning be looking out my window, waiting for the process service to show up with papers demanding that I cease and desist from besmirching and slandering J.P. Morgan's good name. I don't have those fears anymore, I guess, as a function of getting older. And also, I've made the accusation so many times that, if they're not going to say anything by now, what's there to fear? So, to answer your question, it's all J.P. Morgan.
Mm-hmm. Well, I would imagine their fear is if they did take an action against you, disclosure would show your accusations were accurate.
I would think that. I think I could meet that challenge. I mean, I'm saying you got to be careful sometimes with what you wish for. Sometimes you get it. And, I may rue the day and regret having taken such a strong opinion and position against J.P. Morgan. Let's face it, I'm not even a flea on the butt of an elephant when it comes to comparing sizes. You want to be careful about, elevating yourself to the size and the power and the prestige of an organization like J.P. Morgan, and I don't do it lightly. But look, I'm relying on public data. It's public data mostly come from the U.S. government in the form of the Commitment of Traders report and the Bank Participation report from the Commodity Futures Trading Commission and official COMEX CME Group data. So I think I have firm ground to stand on, and I think I could meet the challenge of proving openly that J.P. Morgan is every bit the crook that I claim them to be. And some parts I would welcome the opportunity, but I'm also a realist. I don't want to, you want to be careful what you root for sometimes. But I'm amazed that they haven't come back and tried to shut me down. I said one thing about 10, 12 years ago about BlackRock, who was the sponsor owner of the big silver ETF, the SLV, and I didn't mean it the way that they took it. I think the problem was I made public their CEOs and their president's email address, and everybody wrote in calling BlackRock crooks and stuff like that, and they went off the deep end and demanded that I retract and stuff. And I did take off the email addresses and stuff like that. But it's amazing with J.P. Morgan, they don't do anything. It's like they just sit there and take it. I assume it's because they don't want this to explode in attention and what have you. Maybe I'm misplaced, but I certainly have no qualms about calling J.P. Morgan the super crooks of the gold and silver market.
We'll have more with Ted Butler right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to silverradio.fm. Available online at housestreet.com, talkdigitalnetwork.com. Welcome back. We're speaking with Ted Butler. Ted, for silver mines that are still open, is the lower oil price likely to make them more profitable?
Yeah, I have to say it's one of their biggest cost factors. So just on a simple mathematical basis, yeah, it's got to make them a bit more profit. But I would point out, at current prices, 15 and a half as we speak today, I don't know of any primary silver miners where silver is the main product that are producing at a profit even with the lower oil prices. So while the lower oil prices do help in the case of what we call primary silver mines, the cost savings is, in my mind, not even enough to get them back to a break-even basis. It's more of a reflection of how cheap silver is rather than how cheap oil is.
Should the trillions of dollars of additional U.S. debt be good for the price of silver?
Boy, you would think so. I mean, we're inflating, it seems, everything, pumping money in. It's hard to imagine how it wouldn't be, good for silver. I mean, this is basically, most people tend to look at silver and gold as inflation-type hedges and protection against unbridled money printing, etc. That's not my main focus, but I understand it and accept it. So to answer your question, it's hard to imagine it not being bullish for the price of silver.
Should a black swan like the coronavirus be bullish for silver?
Jim, I think everything that you could mention is going to be bullish for silver in the current world. Fear factor for people are out hoarding, toilet paper and just about everything that you can think of that you wouldn't normally have imagined. Silver and gold are age-old refuges for this type of thing. So again, the miracle is, we're still down $2-3 from where we were at the start of the year with all this stuff going on. And, a reasonable person will say, God, there's got to be a reason for that. I mean, it's like everything that you could think of that was possibly bullish has and is occurring. And the price is still down. And you got to find, you're challenged to find a reason why. I say you look at the COMEX, you look at J.P. Morgan, you don't have to look any further.
Does silver give off any strong indicators when it's ready for a big move?
Well, we haven't had a big move in such a long time, so I don't know what indicators those are, but I do see signs. I do see signs that are suggestive that we should, be moving higher, quickly and sharply. Whether you want to call those indicators or not, I don't know.
Could silver lead gold here in a move to the upside?
Sure, it could. It hasn't. I mean, it's lagged badly. Again, I say because of manipulation on the COMEX, but could it? Yeah. I mean, it has it. Yeah, it has in the past. Hasn't done it for a while, but silver's a much smaller market than gold, and can't tolerate the same type of money inflows that might occur, that have been occurring, and you would think the smaller asset that's less available, cheaper in price, would have more of an impact. And I can certainly see if silver takes off like it should, and has in the past, and as it should in the future, that I could see it, support. They're two different markets, but I can sure see it supporting gold.
We'll have more with Ted Butler right after the break.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up now for the HowStreet.com weekly recap on our homepage at HowStreet.com, TalkDigitalNetwork.com. Welcome back. We're speaking with Ted Butler. Ted, is the commitment of traders a good indicator for the near-term price of silver?
Well, it depends on what you mean by near term. I think the commitment of traders and the market structure that it portrays is the most important thing in silver and gold, and in a lot of markets. It is where, COMEX is where the price gets set, and the only indicator, the only measure you can use to judge what the market structure looks like is the commitment of traders report. So it's at the top of the list. I don't know what would be number two. Now, normally you'd think physical supply and demand would have much more of an impact, and it should under basic economic principle. But because the COMEX and the paper position, contract positioning has such a dominant influence on price, that's what sets the price. And the commitment of traders, if you study it over a long period of time, you'll see that this is what this positioning is all about. It tells you who's basically long, who's short, and nothing could be more important. And maybe not. It's not a short-term trading indicator. You wouldn't use it to day trade or to pick prices for the next few days or few weeks, but to give you an idea of how the market is positioned and where it's most likely to go on a major price move basis, up or down, hands down, it's the commitment of traders report.
Does it look like silver could have a V bottom on the charts?
Yeah, it does. First of all, we have come down sharply, and we have moved back up sharply. Not as much as we've moved down over the last, month or so, but it has all the makings, as does gold, of a V-shaped bottom. And more important than that, the commitment of traders coincides perfectly with the V so far. In other words, on the down leg, the down portion of the V, both in gold and silver, the commercials, particularly J.P. Morgan, was able to convince and fool and trick and snooker, the speculators who were long to sell out, and that J.P. Morgan bought back basically every contract it could, both in gold and silver, on the V portion that's going down. And now that we've started going back up, J.P. Morgan is perfectly positioned for a price explosion in gold and silver. Now, whether that'll occur or not, remains to be seen. But as far as J.P. Morgan being in perfect position for the price of gold and silver to move up sharply here, it doesn't get any better. It hasn't been any better than it is as we speak.
Is a short squeeze in silver possible as silver moves higher?
Not only possible, I would say inevitable. There are, both in gold and silver, roughly about 8 to 10 big shorts, commercial shorts, banks basically. Not J.P. Morgan anymore. They were always on the short side for the last decade, but ever since taking over Bear Stearns. But they managed to close out their short positions completely, J.P. Morgan. But the other 8 or 10 big shorts are still on the short side and losing badly, I might add. Certainly in gold, not so much in silver yet. But they're basically the only short. The entire short position on the COMEX is held by these 8 or 10 banks, foreign and domestic, and they're under pressure. They've never ever bought back and covered shorts on higher prices. Never. And not now, not until now. And it may be that they won't. Time will tell. But the fact is that they're in jeopardy, I believe, and in a precarious situation, and in position to get double crossed by J.P. Morgan, who was always in their ranks, but now as J.P. Morgan's removed itself, is no longer short, and these other big shorts could be facing the baptism of fire coming up, and if they do start to panic and realize that their losses are getting too big, and it's measured, they're out about $5 or $6 billion. These eight or so traders as we speak now, which is very large historically. If they decide to buckle and run for cover, that will just set a fire under the price of gold and silver. Now that remains to be seen. Okay, they've never done it. These big shorts have never bought back positions to the upside, but I don't know if they can avoid buying back short positions at this point, and that's what's going to determine the price, quite frankly. And if we do start to run in price to the upside, whether J.P. Morgan adds to short positions. Now, they might not add, or I claim that they're not going to add one of these days, because at the same time they've been short all these years, J.P. Morgan, the last 10 years, they've built up quietly, almost unbeknownst to everyone, a massive physical position. I say J.P. Morgan owns 25 million ounces of physical silver and 1,000 million ounces of physical silver. 25 million ounces of gold, 1 billion ounces of silver, and they're in position to just make an absolute financial score. They're already ahead 10 to $11 billion on their gold position, but they stand to make an absolute score if they let the price run without adding short positions for the first time, and that's what's going to determine the price coming up, whether J.P. Morgan adds to short positions or not.
Now, Ted, I believe we've probably touched on it, but how manipulated is the silver market, and could the manipulation be coming to an end?
Well, the easy answer is it's the most manipulated market in the world, because it's the cheapest market in the world. There's no reason for silver to be so cheap. There's no reason for silver to be as cheap as it is compared to gold. And when you're dealing in a relative measurement, then you can go back like 5,000 years. Silver's never been this cheap compared to gold. There has to be a reason for it. And it's not only because it's manipulated, because it's the most manipulated market in the world. Gold's manipulated too, don't get me wrong, but compared to silver, there's just no comparison. Silver is the most manipulated market in the world, and yes, I do think that there's a very good chance that might be coming to an end, a conclusion very soon.
And why would that end?
Because J.P. Morgan decides that the pigs at J.P. Morgan decide that they got enough gold and silver to make as much money as they can on the upside, and they don't need any more. That'll be the determinant.
Any thoughts on what a fair price for silver would be without this manipulation?
That's hard to conceive because we have the manipulation and we've had it for so long. So it's hard to, step aside and say what would it be if we were in a free market. I mean, you could throw out a number, like $50 or something like that for starters. Okay, but it's a really hard thing to gauge because in our lifetimes, our collective lifetimes, silver has never been not manipulated.
The worldwide market for silver, do some countries buy more silver per capita than others?
Well, I don't know about per capita, because you got to divide by the population. India is obviously a very big buyer. United States, Western Europe. Look, it's wherever there's some kind of investment demand, Asia particularly. So I don't know how to break it down. It's a worldwide commodity. It's been around for 5,000 years, and if the world exists that long, it'll be around for 5,000 more.
Do you think we could see any silver-backed currencies?
I don't think about that too much. I don't think so. I mean, I'm thinking, why would things would have to be really bad for governments, not just the United States, but world governments in general, to resort to a backing of any of their currencies. Here they got a free ride. They're printing it, by the trillions with no backing. They'd have to be, governments would have to be dragged and kicked and pulled along by the feet into having a backing for currency where they have basically free reign. Now they can print without any restrictions. Governments generally are not going to seek out a restriction like having it back the currency with metal, with gold or silver or whatever, unless they really have to.
Is there enough silver to back silver futures contracts?
Yes and no. I mean, it's the problem is that the people who buy futures contracts basically are not interested in basically taking delivery. They're making short-term bets on what the price might be. If push came to shove and everybody wanted silver, then there wouldn't be enough unless, and it's a big unless, the price went up accordingly. That's the whole meaning of the law of supply and demand. The price is the fulcrum. You got too much demand and not enough supply, then the price has to go up. In the case of silver, it's been all screwed up because the price is what's being artificially manipulated by, up until now, excessive and concentrated short selling on the COMEX, and it's kept the price down, but it's distorting the law, the supply side and the demand side. And when the manipulation gives, it just gives in a rush, and we just take off to the upside and adjust the price. So that's what I would think is going to happen someday.
Is the gold-silver ratio looking bullish for silver?
I don't know how you could get any more bullish. We're at, I saw someone the other day said the ratio is at 5,120 year record. So it's a pretty long time, I would think. It's so cheap, compared to gold, and at any time over the scope of history, that I don't know how anybody could look at it and say, hey, there's something wrong here. This shouldn't be this cheap. And there has to be a good reason why it's as cheap as it is. And as it turns out, as we've been discussing, there's a very good reason. The price has been artificially manipulated, and it's the most manipulated item in the world.
When you invest in silver, do you prefer coins, bullion, ETFs, stocks, or junior stocks?
Look, I do all the above, but the main analytical focus is on the price of the metal itself. All things will emanate from there. So my research efforts are on why the price is where it is, what it's likely to do, what's going on in the background. I'm not offering a specific investment service or anything like that. Just an analytical. If you want to know really what's going on with gold and silver, that's what I try and accomplish.
When it comes time to sell, what's the easiest and what's the toughest to sell? Coins, bullion, ETFs, stocks, and junior stocks.
Well, look, when they're going up and it is time to sell and the prices are sky high, I mean, it's kind of easy to sell them all. The problem is that, you may sell them too soon and kick yourself a bit. But if it's generally speaking, when the time is right to sell them, it's not going to be prove difficult in doing in anything. I don't think. It's not now. The time is not now, though.
How can people find out more about your newsletter?
Simple Google search, butlerresearch.com. And I think there's a whole bunch of, you get access to past articles, current articles, obviously, or for subscribers, but and then you can search the internet. There's a lot of other public articles that I put out there.
Ted, thank you so much for being the first guest on silverradio.fm.
Well, good luck to you, Jim, and thank you very much.
My guest has been Ted Butler, founder of Butler Research LLC, online at butlerresearch.com. He was speaking to us from Cape Elizabeth, Maine. If you have any questions for Ted or any of our other guests, you can send them to info@howstreet.com. I'm Jim Goddard. Thank you for listening. Comments made on silverradio.fm are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at howstreet.com, talkdigitalnetwork.com. silverradio.fm is a production of House Street Media Incorporated. Executive producer is Tom Allen.